It's an hour before the open on Tuesday, October 12th. Hello, traders. Let's take a look at the market. I really want to start there because we've got some important developments. You can see the downward sloping trend line. It is firmly intact. Market tries to get through the previous downward sloping trend line and it is repelled. We can see that by the bearish hammer. Doji formation closes on its low of the day. Follow through selling on Friday and we start to get into this gap. However, you can see how we touched that trend line yesterday and then we backed off the entire day. So let's take a look at the price action on a 5-minute basis in just a second. The point that I want to make right now is that the selling pressure is here. It's alive and well. The market closed below the 100-day moving average. I've been telling you that this is not your typical sell off, find support, test it, rally hard. We've seen this steady selling pressure. We had the bounce that we expected. There's your upward sloping trend line, bear flag formation. Wham! Long red candle, heavy selling down to the 100-day moving average. This is not what we've seen over the course of the last year. Every single dip that we've seen has only lasted a handful of days, and then the buyers relentlessly come back in and drive the market higher. This tiny little dip and then off to the races. Tiny dip off to the races. This is a sign of strength. You would think that after a year of this type of price action, the first dip that you get, you're going to see that same type of release and a new high in the market. We didn't get that. In fact, you would think that on a retest of that 100-day moving average and this low here, now we can go off to the races because buyers are going to have more confidence. Now we get 5 days of support here and still no release. We get this tiny little release and then whap, right back at it. The sellers are unloading stock. Very important to know that there is natural selling pressure, risk off. Asset managers are reducing risk. That's why we're seeing these resistance levels like this and an inability for the market to get off the deck. We've got a couple of tails above body, which shows you they've tried to run it and then it backs off. Tried to run it and then it backs off. I believe that today is going to be a bearish day. Now, after a 12-month bull market run, bull markets die hard, especially with the Fed continuing to print money. So we've got an FOMC minutes release tomorrow that will give us an idea of how the Fed officials voted last month and what their perspective on interest rates is. We might even hear that there will be some type of taper talk, or at least get a feel for how they might weigh in during the November 2nd meeting. I believe that we're going to see tapering start soon. The economic activity has stabilized. This was supposed to be a measure to help us fend off a financial crisis during COVID. That has passed. We are also seeing higher commodity prices. We're seeing wage inflation. There is upward pressure on interest rates. Take a quick look at TLT. Super important to get the backdrop here, folks. You can see how I've mentioned this. We're below the major moving averages, could not get above the major moving averages. Horizontal support breached last week. Look at us continue to drift lower. That means interest rates are going higher. That is not good for the market. So are they factoring in tapering into the next FOMC meeting on November 2nd? Are they expecting some hawkish news tomorrow on those FOMC minutes? Probably. So a little bit of that is already factored in. Go back to the SPY. Now we know that we have to favor the short side. Up in here, we didn't know because we could have skyrocketed through that downward sloping trend line. Boom, 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 off to the races, challenge the high. Now we know that this downward sloping trend line is firmly intact and we're back below the 100-day moving average. If we take out the support level at 428, we could easily test the 200-day moving average. And with each subsequent market decline, buyers will become more passive because they can see that this is not just a temporary one-off little dip that they can come in and gobble up. This is sustained selling pressure. And typically on these pullbacks, things really start to accelerate once you finally hit that air pocket and that low. That's when buyers start to get much more aggressive. I believe it's going to come into play somewhere around that 200-day moving average. Credit issues in China, we don't know. Their regulators are starting to look at all the state banks, so we'll see. We have to keep a close eye on that. Evergrande, hopefully it was a one-off, but if we start seeing other real estate property managers, property owners that have credit issues, it will be a gigantic red flag. So right now, we need to favor the short side. Let's take a look at yesterday's picks and see how they fared. As I mentioned, this is a swing, it's not a swing trading environment, it is a day trading environment. So we'll take a look at the long that I showed you, COP, and I had mentioned to you that you have to wait for relative strength. You can see this long green candle here. I said, do not buy the open. You've got to monitor the stock and wait for relative strength during the course of the day. So what I'm going to do is I'm going to put up the SPY overlay so that you can see what the market was doing. Right out of the gate, you get a long red candle. So you see profit taking. What did the market do? It ran higher. That is relative weakness. Market running hard, stock not following, not even treading water, pulling back. So that is a warning sign for you. That is a sign that you don't want to touch this thing. And we'll put up the 1 OSI indicator, and you'll be able to see orange line above zero. The stock starts to gain some relative strength in here. So yes, you could come in and you could buy in here. I would not have. If you'd have done that and simply sold when the stock lost its relative strength, it would have been about a scratch. You're in here, you're out here, roughly a scratch on that trade. Now you can see that there's some pretty steady selling pressure. You'll also notice that 1OP starts to gain some traction here, right in here. So you've got market down, down, down. Market's been selling off hard. What is the stock starting to do? It's not selling off with the market. That's why it's strong relative to the market. That's where the orange line comes into play. This would be a decent entry point, especially over here where we've got one low for the day for the market, second low for the day for the market. Stock is still in a compression, but starting to show some signs of improvement. So now you start getting this uptick in the market and the stock releases. Draw your upward sloping trend line. Should probably be stopped out here, especially when you see the market falling apart. Relative strength, trade relative strength. And the beauty of it is that once you start identifying relative strength like we had right in this area here, if you get that next leg of the market sell off, because you're in the right stock, you will have time to adjust the position. So let me repeat this because it's an important point. So Pete, I'm in a stock with great relative strength and it's holding up super well and the market is falling apart. What do I do? You evaluate the market drop. Right in here, that would be a triple test of that support level. If the market has another leg lower, you've got a new low of the day. Get the heck out. That is your stop. It is not based on the price of the stock. It is based on what the market is doing. Market first. Get out, take your profits. Every stock is eventually going to sell off with the market if that move is big enough. So exit. If this happened to be a temporary test, shake out some sell stops, rally back, good. I could get right back in this stock and I know that it is the real deal. That's how you have to day trade it. Let's take a look at a couple of these shorts that I showed you and let me think about what they are. CRSP was one that I highlighted on the short side. Choppy. Market up, 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 up. Okay, well, the stock has got a little bit of relative weakness. It is trading higher, but it's really not able to advance with the market. Once the trading day starts to settle in, you can see it's very choppy back and forth. I do not like this type of price action, so I would not have traded CRSP. I still think that that chart looks bearish on a daily basis, but now you've got the market actually waffling right in here, not moving at all, and the stock is starting to grind higher relative strength. So no, you would not want to short this stock when it's got relative strength. Let's take a look at the other one that I highlighted, Facebook on the short side. Facebook down on the open, market up, up, up. That is relative weakness right in there, and you can see the relative weakness here. But we needed to wait to see what the heck the market was going to do. Market going to be strong or weak today? Actually, it was very strong early and then it sold off hard. And we'll take a look at that price action as well. You don't really get an opportunity, in my opinion, on Facebook. Yes, you could draw upward sloping trend line. You could short it right in here, you're getting relative weakness right in there. You could short it for that piece of the move right there. The better move, however, does come later in the day, in my opinion, right off of that relative weakness into the close. You've got market momentum. You've got a new low of the day right in here, late in the day in the last 45 minutes of trading. You had a beautiful opportunity to short Facebook. If you didn't do any trades all day and you sat back and you just watched the price action and you found this trade late in the day, you just watched those three stocks. This one seems to be setting up really well. Upward sloping trend line, breach to the downside, market weak, taking out the low of the day, relative weakness in Facebook. If that was your only trade of the day from 327.50 down to 325.50, 2 points, if you're trading options, that's the only trade you needed to do the whole day. Don't feel like you have to be in there grinding it out and trading all the time because you're going to have a lot of marginal trades in there. If you simply wait patiently for your opportunities, you're going to be in great shape because you'll have all your powder nice and dry for a move like that. Let's go back to the market. Super important. I feel that the market is going to test the downside. This is some heavy selling. I saw these stacked long green candles early in the day, especially these three, and I got pretty bullish. I thought that this pullback was going to be a bullish flag formation. Call a spade a spade. I did end up buying in here. I ended up taking a loss on that trade. So the market started to show some weakness and very heavy weakness. When I look at this type of price action, big rally, big sell off, no net change. So by midday yesterday, I'm like, well, here we go again. This is exactly the pattern that we've seen for about the last couple of weeks. You get big rally, big sell off, big rally, big sell off, big rally, big sell off. And where are we? We're right here. Pretty much where we were about 8 trading days ago. So this is a transitionary period. I do believe that because we've seen persistent selling. I believe that because the bulls have not been able to get the market going, the bulls have not been able to do what they've historically done in the last year, which is to blow through that downward sloping resistance line, that there are sellers and the selling pressure remains persistent. Banks are going to start releasing earnings. Tomorrow they start releasing. That'll kick off Q3 earnings. Banks should perform pretty well, and I think there's going to be some optimism because interest rates are moving higher. That's good for banks. So I think the initial wave of earnings are going to be pretty well received. Now, as we start getting further and further into earnings season, I believe that you're going to see higher input costs, those coming from labor and raw materials, bite into profit margins. The other thing that you should know, S&P 500 PE ratio, forward PE has not been this high since the tech bubble of 2000. There is a lot of fluff in stock prices right now. They are priced for perfection. So these are headwinds that we need to be very, very aware of. So let's take a look. I'm going to go into, let's do something I haven't done before. I'm just going to look at what pre-open gainers we have and see if we can find something that looks good on a daily chart that we can get behind. So these are stocks that are moving higher in pre-open markets. And if I don't see anything that I like, then I'm going to take a pass on it. GTC, I see a possible bull flag formation here. There's your flagpole, downward sloping trend line. McDonald's can get above that trend line. I want to know about it. I'm sorry, that's CRM. So CRM could have a bull flag forming. And there you need Nike through that 100-day moving average. What would I do there? I would come into Nike and I'm going to do a double click move right here. And I can't get that alert line drawn, so I'm going to draw it right here. And I am actually looking for a feature that will allow me to draw that alert line. Going to be adding that to Option Stalker. based on the major moving averages. There's nothing there of interest. Microsoft, if Microsoft can get above this high here, I might be interested. Downward sloping trend line above the 50-day. So I'm going to have to continue to move on to other searches to find something I like. I'm going to go into swing trading. I'm going to use a very easy search. This is something all of you can do. I'm just going to look for a stock that was going into yesterday. The stock was below the major moving average. By the end of the day, it was above the major moving average. And I'm going to use a 200-day because it's a little more significant. And I'm going to look at a couple of stocks. That doesn't look bad. Big move in here. I don't know that I'd want to chase it. This actually looks pretty interesting to me. JKS. This is a solar company. Downward sloping trend line. Breach to the upside. Stock above the 100-day moving average. Stock closes above the 200-day moving average and the 50-day moving average and that downward sloping trend line on heavy volume. Let's take a look at the 5-minute chart, and you can see market got nailed hard yesterday. What did the stock do? It compressed. It held the halfway point of that long green candle right in there, and you can see through the overlay of the S&P 500, market getting trashed. Stock holding its own. Market stabilizes a little bit. Market getting trashed. Stock nice and stable. JKS wants to go higher. Pete, should I buy it on the open? No. This is the same thing I told you Sunday night. No, you do not want to buy it on the open. You want to wait for signs of relative strength. When you have relative strength and you know which way the market is going, market first, market first, market first. You know that based on yesterday's selling pressure in the S&P 500, sellers are going to test the bid at some point. And so when the market opens higher today, does that mean that that's it? All the selling is gone? No, those gains are going to be challenged almost instantly. Until the market sells off and you have a support level, you wait for that market support and then you wait for JKS to have relative strength, orange line above zero, then you can buy JKS. And on a daily chart, because I like it, what I'm going to be watching is I'd like to see at very, very minimum the opening from yesterday hold, and that's the 200-day moving average. So if the stock reverses and it takes out the 200-day moving average today, all bets are off. Forget it. That was a major support level that I was counting on. That is a nice tailwind that I am counting on. And when it's gone, it tells me that this little bounce in here may have been suspect. It could have been all fluff. But I think you're going to see JKS start to grind higher. I do like the relative strength that I see in it. So that's going to be your long today to focus on. And we'll go and take a look at a short here. We're going to go in and do the same thing. What stock was above the 200-day moving average yesterday or one of these major moving averages and closed below it? So let's take a look, see what we've got. PCG, I'm looking for a bearish stock. Three green candles through the 200-day. It backs off. I'm not too excited about that. Got a nice strong upward sloping trend line, so not going to look at that. XLU, not too interested there, although it looks weak. That's an ETF. Okay, let's do the 100-day moving average. Okay, I got something I like here. LUV. So the stock tries to poke through the 200-day moving average. You can see how it just backed off almost instantly, not able to hold that 200-day moving average. And now, yesterday, big drop below the 100-day moving average, bearish hammer, upward sloping trend line right here. Let's draw that in so that you can see it clearly. We're going to connect that line, we'll connect that line, and you can see that is a support level that should have been preserved. I can draw a steeper line in here, and you can see how that's been violated. So it's got a pretty clean path to the 50-day moving average. Let's put up the 5-minute chart, take a look at what the stock did yesterday. Full of relative weakness in here. That is what you want to wait for. You want to wait for these opportunities. Stock is super weak right on the open. Oh, here we go. I'm going to short the heck out of this thing. Look at it fall. LUV, that plane is crashing, baby. No, stock bounces. We don't have an opportunity until we start to see the stock soften right in here. You've got a beautiful short based on relative weakness right in there. Now, the market really starts to fall apart later in the day. You can see this last wave of selling right in here. You've got this horizontal support taken out. You could pick up a small short in here. That's not too bad. I like the Facebook short yesterday better. The point of this is wait for that relative weakness. If you see the market open higher this morning, which is poised to, let me check on the S&P futures. I think we got about a 3-point rally or so. Actually, S&P futures are up 10 points. Now we're going to conclude with the market, and those are your picks of the day. And so here's what we can expect. We can expect that we're going to see at least some type of little bounce this morning. We've got a 10-point rally in the S&P futures. So how am I going to approach this trading day? This could very easily be a gap reversal day. And I'm looking for one out of the course of the last week. I think we've had a couple of them in here. So I just have to scroll back so that I can show you what we're looking for. This is maybe the type of pattern I'm looking for, although the open will be higher. A little bit of strength early and then wham, this type of selling pressure. When you start seeing these red candles early in the day, depending on what LUV is doing, you may have a nice shorting opportunity for it. I can't find a gap reversal on the downside here. I know we've had them. And these types of candles early on is what you want to be looking for. So if the market opens higher and you get long red candle, long red candle, long red candle, very little overlap, stack one on top of the other, we're heading south, folks, and you need to get bearish. LUV may work in that type of instance. Watch for that relative weakness. So I still can't see. There would be an example. So you get your heavy selling yesterday, which is what we had. Then you get a little gap up higher. Oh, here we go. Everything looks great. Not so fast. They are going to test the bid. After a heavy round of selling yesterday, buyers are going to be passive. They don't want to stick their head in the noose. There's no reason for them to be aggressive, but they're going to see if there was a little bargain on the close yesterday. So they'll nibble, 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 see what's there. And if they can't get the market moving higher, then they are going to get very, very passive, and that's where you see the sellers come in and try and establish that bid. So if we have a nice bid that's established through the course of the day, you let the market find that support. Maybe you need a double bottom high or low, and then you're going to shift gears and start looking on the long side, JKS, see what it's doing. And if you've got relative strength in the stock, then you can buy it knowing that the market's got support. That's how you have to play it. So be fluid. Know that I feel the market is going to try the downside today. I do not like another close below the 100-day moving average. If we close below the 100-day moving average, I might even take an overnight short. I have not taken overnight short positions. Why? Because the market's in a 12-year bull market run. Market has been in a 15-month bull market run. I feel that there are lots of opportunities to short this market. That's why I don't short overnight. I don't need to take that risk. If I would have shorted yesterday based on this wimpy, weak close on that 100-day moving average, this morning I'd be regretting it. Be like, gosh, dang it. I could have waited. I did not need to short that. And I could have bought it even. I could have gotten short at an even better price this morning by simply waiting. So until we start breaking major technical support levels like this 100-day, until we start breaking this, I have no reason to take an overnight short. I've felt that I can get short almost at any time. In fact, it's been a fairly hard market to short because you get these violent snapback rallies. Now, on the other side of the coin, once we do establish market support in the next few weeks or so, would I take overnight swing positions on the long side? You betcha, because I want to have a big, strong tailwind like that working in my favor into year end, which is normally bullish. So, for those of you who are swing traders with a 3 to 4 week time horizon, stay on the sidelines, be patient. Your time is coming. We need to establish that big time support level, and then we should get a relief rally off of that low into year end. Will we get through the high of the year? Doubtful, but we should have at least a week's worth of really nice price action, maybe even a few weeks. Kind of depends on how all the other things that I've been mentioning shape up. So, favor the downside. Watch for opportunities to short LUV today on relative weakness. Be very, very careful. Be flexible. We've seen lots of price movement both ways. I have no clue of which way the market's going to go. Big rally, big sell off. However, I am biased toward the short side, just simply based on the fact that buyers can't get anything going right now, and there seems to be natural selling pressure. Good luck with your trading. We'll see you tomorrow.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.